Hello, it's Big Chuds, and this is part of the Trading Encyclopedia Daily Education playlist on my YouTube at Chuds Trading. Find me on Twitter at Big Chuds and Bitcoin Live, where I am a founding analyst. For today's lesson, we're going to talk about a descending broadening wedge. I'll do a separate video on ascending broadening wedge. This one's a descending broadening wedge. Here's a quick AI overview. Go ahead and pause and read this on your own time, of course. Let's take a look at a couple images. Here we have it as a reversal pattern. It's descending, which means the lines are moving down. It's broadening, which means the lines are moving apart as opposed to moving together. And it's a wedge because of the intersection of where they would meet, even though they don't in the beginning. All right, so you see this is an example of the reversal variety. Here's an example of the continuation variety. In this case, you have the price advancing and it begins this broadening formation. It's set to high, a lower low, a lower high, a lower low, and it's a series of lower lows and lower highs, but in a broadening pattern. Now, CMT talks about this. It's really just not a very reliable pattern. You can see, there isn't much of an edge in terms of which way it's going to break. It's a very difficult pattern to play, because by the time you break out, in theory, when you take a break, your stop loss is the bottom of the pattern, but it's so far away by the time you break out. Okay, so it's really just to kind of identify the price movement, but in my view, it doesn't give you much of an edge, right? Here's another example of the descending broadening wedge. That's a continuation pattern. In this case, it almost looks like a bull flag. But it's really the fact that the trend lines, instead of moving in parallel with the bull flag, the trend lines are moving apart. So let's draw a potential example. Here's what a reversal might look like. You have the price moving down, and then you start to do this broadening wedge. And that's a very exaggerated, perhaps, version of it. As we see in the example, it's more something like this. The price is moving down, and then we're broadening out that way. Boom, 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 boom. Now, what I would do if I were to play this, rather than taking a break along on the break here and using my stop loss, I would just wait till the initial high is broken. And you can use that to manage your risk. It's very simple. Identifying a pattern is one thing, but playing it is a whole different way. And there's all sorts of different ways in theory for you to be able to play this broadening wedge. Now, in this case, something like this, where they're very slightly moving apart. Again, boom, 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 boom. You can take the trade there, but I would just wait for the major high to break. I'd use that to take my trade, and then I'd set my stop loss just below that level. But the descending broadening wedge, it means that it's descending. The lines are moving down. It's broadening. The lines are moving away from each other, and it's a wedge because in theory, right, they would eventually meet up, as opposed to a normal wedge where they're eventually, like this would be like a normal bullish wedge. You could call this a bull pennant as well, if you like. You see the trend lines would eventually be converging. But in this case, it's descending broadening wedge. It's not a very highly successful, really well-performing pattern according to Pattern Site and CMT, but you can identify it, have a sense of it. And just now you at least have a pretty basic idea of what a descending broadening wedge is. And this is for the Trading Encyclopedia Daily Education playlist on my YouTube. Chuds Trading. Find me on Twitter at Big Chuds and Bitcoin Live, where I'm a founding analyst. Folks, thank you so much. And I'll talk to you soon. Big Chuds out.